Hi, I'm Regina Mangan here from Waterford Property Watch. We are live from Waterford in your pocket and we are going to chat about the property market in Waterford. And I'm absolutely delighted to have my guest here, Tara Kelly, manager with the Mortgage Store. Say hello, Tara.
Hello. Good afternoon, Regina. Thanks so much for inviting me in to chat with you this afternoon.
Great, you're very welcome, Tara. I'm going to just have a little chat to you about the rental market today. And today, in Waterford, in all of the city and county, there are 103 properties to rent. Now, those numbers actually include about 30% of student properties. And about 20% are properties outside of the city. So that encompasses Kilmacthomas, Kilmeaden, Lismore, Dungarvan, Stradbally, might have said that already. And so when we go back to the city, we only have somewhere in the region of 50 properties to rent. That is not an awful lot of stock for a population somewhere in the region of over 50,000. So in terms of what's available to rent today, there are mostly 2 bedrooms available in Waterford City. Actually, half the stock, almost half the stock, are 2 beds. And they are priced to rent at €833 per month. And in terms of 3 bedrooms, there are just over 20 and they're priced now at $957. Now, when I give you these prices, they're actually average prices. So it doesn't mean that every 3 bed is $957 and that every 2 bed is $833. The typical 4 beds are coming in just over €1,200 and there are only 17 of those. So one might ask, well, what's actually going on in the market? A lot of investors are actually, I suppose the word we would use, racing out of the market. In the last 2 years alone, we've seen somewhere in the region of close to 10% of our landlords vacating the rental market. And that's quite disturbing because 2/3 of landlords only own 1 property. So a lot of them are actually accidental landlords, is what they might call themselves, when maybe they've been left a property or they moved up and held on to the property. In Dungarvan today, would you believe there are only 2 properties advertised to rent? 2 properties. One is in Park na Blow, and that's priced at $1,100 per month. And then one is outside of Dungarvan, and that's with Sherry Fitzgerald's Reynolds, and that is in Coolnashmere, and that's €1,100. And I was chatting to David Reynolds this morning in Sherry Fitz in Dungarvan, and I said, David, what's the market like in Dungarvan? And he said, very little stock. That's what all the agents on the ground are finding. And I suppose that's a picture of maybe what's going on all over the country. And sometimes they don't even get to advertise the properties because they would have a queue of people waiting. And in terms of population in Dungarvan, there's just over 10,000 people living in Dungarvan and within a 3-mile radius all around the hinterland. And there are big employers there, such as GSK, Radley Engineering, Eurofins and more. And they're recruiting staff all the time. So this level of stock that's available for rent is quite worrying. Now, in terms of what's available in Waterford, we have a property that I call the Star Rental property that I was looking at this morning to show you. It is located in Newtown, which is a really desirable location in Waterford City. I think everybody would know it, and I suppose I would refer to it as the Park Lane of Waterford. And it's located on the road heading out the Dummer Road with all of the schools, I suppose, within close proximity. And they've described it, Palmer Estates have described it as an outstanding 3-storey, 2-bay period residence in a superb location, located in a much prized and highly desirable area within walking distance of the city centre and a number of well-regarded schools. At $1,900 per month for a period property with 4 bedrooms over 3 floors, I guess the same property in Dublin might cost you somewhere between 4,000 and 5,000 per month. So somebody might say, watching Regina, you're losing the run of yourself. We're not in Dublin, of course we're not, but it's a beautiful property. So in terms of what's available to rent today, just picking out 4 properties. There is a 3-bedroom in the Beaches in Ferrybank, and that's priced at €900 per month. There is a 3-bedroom in Earl's Court on the Dunmo Road, and the Dunmo Road is very popular because, again, it's close to amenities and it's close to the hospital, and that is €1,000 per month. There's a 3-bedroom in Collins Avenue on the Dunmo Road, and that's priced at $1,200. So because Collins Avenue is a newer estate, and one of the things about Collins Avenue is that they have an amazing residents association. They have won numerous awards, and they really do take a lot of pride in the estate. So that makes it a beautiful place to live. And there is a 1-bedroom in the infirmary for €800 a month. So that's just a little snapshot of the market. In terms of if tenants are having difficulties, what we would be saying, the best protocol would be Threshold. And they provide independent advice to people renting properties, because there's a lot of legislation change, which I suppose is very important in terms of guaranteeing tenants security of tenure. Looking at what's happening in terms of mortgages, and I'm going to come to my lovely guest Tara now in a moment, but new figures from the Banking and Payments Federation Ireland show that just over 4,100 mortgages were approved in April. Although it's slightly down month on month, it's actually up 9.5% on an annual basis. And the figures show that just over half of the mortgages went to first-time buyers, with movers uppers taking a little more of a quarter of that figure. But the number of mortgages given to investors has actually dropped 30% year on year for buy-to-lets. So it's not really making sense for investors to borrow. Any investors that are buying rental properties now, they tend to be buying apartments anyway, from what our evidence shows us in the Waterford market. And they're buying, I suppose, well-priced property now, where a 2-bed is selling typically somewhere between 100, I suppose maybe 80,000 to 120,000, dependent on the apartment and where it's located. So back to mortgages, I'd like to introduce you to Tara Kelly, and I always call Tara the guru of mortgages. So Tara, you're very welcome.
Thank you very much, Regina. It's lovely to be here this afternoon with you.
Tara, will you tell us, for somebody who's renting at the moment and is thinking, one day I'd like to buy my own home, is there, how soon should they prepare to get ready to apply for mortgage?
To be honest with you, Regina, anybody that's considering going down the mortgage route and getting on the property ladder, no time is too soon. Okay. There is a process there, and your application has to get in. There's documentation that has to be gathered by the prospective purchaser, the prospective mortgage applicant. So that does take a bit of time. Now, it depends on whether somebody's self-employed or whether they're PAYE. Obviously, if they're self-employed, then we're looking at getting certified accounts from their accountants, which can take longer. It also depends if they're self-building. So if somebody's self-building, then you're into architect territory, into planning permission. So I would say to anybody that is considering applying for a mortgage, get in touch with your mortgage advisor or your bank and start gathering your documents, because we in the mortgage shop now can get you approval in principle, and it will hold for 12 months. So within that 12 months, whether you're building or whether you're searching the market, your approval will hold. So you don't have to provide any further evidence to the bank. You just have to drive on and look for a property that suits you.
So for somebody, we'll say, who's working now and is thinking maybe in 12 months' time or 2 years' time, I'd like to get on the property market and buy my own home. What are the practical things that they can start doing now to get ready? Tara?
Okay, well, Regina, to be honest with you, if somebody's thinking in 2 years' time, maybe they're just a little bit premature in coming and getting advice on taking out a mortgage. But certainly if somebody was saying, I'm in a rental situation, I'd like to get on the property ladder, I would definitely say that, if you're in full-time employment and, you're anxious to get off the rental market and onto the property ladder, basically what you need to do is you need to talk to a mortgage advisor, and they will explain to you exactly what you need to have and just line up your ducks. And, I'm now 30 years, giving away my age, obviously I started when I was 5, but I'm 30 years doing mortgages, and since time began, fundamentally it's the very, very same criteria. Okay, it may be tighter and harder, we may have loosened up at times, but it's still the very, very much the same practicalities that you need.
But is it in terms of, if I was to go into a mortgage advisor now and I was to bring in, you'd ask me, I presume, for a copy of my bank statement?
Absolutely.
Is there any kind of red flags that mortgage advisors or banks look at?
Absolutely.
So what kind of practical things?
Well, I mean, it's absolutely paramount that you keep your bank statement in credit all the time. We don't want to see things like you're going into overdraft every month just shortly after you get paid, because that means that shows the lending institution that you're living beyond your means. So if you're getting paid and within that month of your pay going through, that you're actually constantly in credit and you're building up your current account, you're paying your bills, you're paying your rents, that's good, because that's a window and an image of the underwriter who's fundamentally underwriting your loan. He can see that you're getting paid X amount, and with that pay, you're using it to pay all your bills. Obviously, you have a lifestyle to maintain, but you're still living within your means. So there's no chance in an underwriter's eyes that, given your proven track record on your bank statements, that you're going to start this wild spending. Like, there are obviously things on a bank statement we don't like to see. Like, we don't like to see online gambling.
And I'm glad you brought that up, yes.
We don't like to see that, because, look, it's like everything else. It can lead to problems. And if we can see a lot of online gambling going on, and, I've had customers come in to me and say, well, Tara, look, I don't drink, I don't smoke, we don't go out, we don't socialise, and I have a little flutter at the weekend and that. That's okay for you and I to be chatting about it, but an underwriter underwriting a huge big loan, which is your mortgage, which is the greatest loan probably that you'll ever take out, they don't like to see those type of things. So I would be saying to anybody who has their little flutter at the weekends, listen lads, go on into one of the betting offices and have it over the counter. Don't be setting it up on a standing order through your account. And there are other things there that they don't like to see overspending, and they don't like to see too much of online purchases that are running you right down to the bare minimum in your account every month. We like to be able to see that you've a good balance.
That's very good practical advice, Tara. And in terms then of getting a mortgage, will you just talk us through sort of in terms of how much of a mortgage will somebody get? Is it multiples?
Absolutely, and it's central bank ruling, Regina. It's people come into me and they say, "Oh, Tara, can I not get any more?" Unfortunately, Tara Kelly or the banks or anybody, we don't lay out the rules. The rules are laid out by central bank, and central bank ruling are 3.5 times your gross salary. Now, if it's a single applicant, it's 3.5 times the gross salary of the single applicant. If it's a joint applicant, you add the two gross salaries together and you multiply it by 3.5. Now, that is subject to terms and conditions. So obviously, Regina, if you multiply it out by the 3.5 and you get your figure, if there's a loan in place there, obviously we have to take that off. That'll have to come away from it. Your monthly repayments would be added up and deducted. If there was maintenance that you were paying there, obviously that would have to come up. But if the bottom line is that you're working off 3.5 times your incomes, and that's central bank rulings. Now, there are exceptions in exceptional cases, but to be honest with you, there's 5% of the lending book in Ireland based on exceptions, and I don't get too many people asking me for them because they are pretty much in tune with what central bank rules are when they come to me.
Okay, so the average property for sale in Waterford, that's divided up between everything that's for sale in the city and county, is coming up at 197,000, Tara. So in terms of maybe a couple who don't qualify for a mortgage based on the 3.5 times multiple, is there any other mortgage assistance available?
Yes, there is. There's the Rebuilding Ireland scheme, and that's available through the corporation, Regina.
Okay.
Now, that's a great scheme for people that are actually falling in under the middle to low income earning bracket that we would class that at. There is hope out there. So basically, you can borrow up to 5 times your salary on a flat rate of 1% over 30 years. Now, there is a certain criteria to that, Regina, that you must qualify for. So you must be either on less than 50,000 a year as a single applicant or less than 75,000 as a joint applicant. And you also must have been declined your mortgage by 2 financial institutions.
So can you think of any clients that you've helped, without obviously giving their names away or anything like that?
Absolutely. Yes, there is. I can actually, off the top of my head, I can think of one client at the moment, and yes, their incomes do fall, their joint incomes do fall in under the 75,000. However, the incomes are actually strong because, believe it or not, they're both on 32,000 a year, which coming in at 64,000. They're full-time, they're permanent, they're long-term. They're in an industry which is actually fast-growing. They do get bonuses and overtime, and they have a fantastic rental record
is it? Great,
behind them. So we have evidence of it. We
questions?
have over 15% in savings there to prove. So it's an excellent case. But,
sorry about that.
That's no problem. I love to hear myself talk. So they have, they're literally, they have all their ducks lined up. But look at Regina, I'm not going to lie to you. It's the very same process as what it is as applying for a mortgage. Just because it's through the corporation, people may feel that they may be just a little bit easier on the underwriting. No, they're not. They are the very same. They need to see your bank accounts. They need to see your savings history. They want a track record of your rentals. And like that, I'm working with this particular couple, and I could say to you, I'm working nearly 8 months with them to get them over the line. But like that, Regina, I'm so long done mortgages. I've never yet once said to a person that came into my office, you will not qualify for a mortgage. I always say, maybe not today. Not today, we're not mortgage ready. But if you work with me, we'll get there. So yes, there is alternatives for people there that don't qualify for the mortgages that you're talking about.
Very good. And in terms of rates, is there different, without getting into all the rates, but do different banks offer different terms?
Oh, absolutely. And I always say there's no such thing as a free meal. And I've spoken before with you, Regina, about this. There's so many offers out there at the moment to, I suppose they're targeting the first time buyers with the 2% cashback deals, and that they're going to pay your legal fees, and all these carrots are out there. And people need to be very, very mindful of these deals that are out there, because look, at a mortgage is a long-term commitment. So believe me when I tell you, Regina, that look, at if it looks good and it sounds good and it feels good, trust me, when it comes to banking and comes to finance, there is a hitch somewhere down the line. So you can be sure that the rollover rates would be a lot higher than what you'd possibly be getting from a financial institution that's not necessarily offering.
So one of the things that I'm intrigued about is most people actually go to a bank for mortgage. So in general, going to a mortgage advisor, what's the difference?
Well, I think fundamentally the greatest thing that we have to offer here in the mortgage shop is that we don't charge fees, Regina. So, I mean, you come into me, you sit down. If it takes me a month, if it takes me 12 months, I work beside you. Your apartment, we don't charge fees.
But even aside, we'll say from a mortgage shop,
like I search the market for you.
Yeah, but even in terms of mortgage advisors,
absolutely,
independent mortgage advisors, if people are watching this all over the country, independent mortgage advisors, do they provide, I suppose, do they go out and get the best rate? Is that
absolutely
their job?
Absolutely. And I think that the difference between the independent mortgage advisors, I mean, we have our clients' best interest at heart. So, we're not a bank, so you'll always get me. And I mean, people always say, Tara, during times, would you even think of going part-time? There's no such thing as a part-time mortgage advisor. You're working 24/7, Regina. I take calls from people on a Saturday. I can take calls from people on a Sunday. I'll take calls with people up to 8 or 9 o'clock at night time, people that know me, that have come back to me for mortgages, that have passed and referred to me.
And so
we're always there.
Yeah, that's brilliant. And I suppose in terms of, look, it's the same with estate agents, it's how you roll. But I suppose the key question I have in general for mortgage advisors, it's to go to a mortgage broker before the bank.
Absolutely. I mean, people are happy. If you're happy with your bank and you're banking with your bank and you're happy with the service they're providing, I'm not here to knock the banks and say, well, look, we're far better than the banks. It's a personal choice. It's like everything. People have the choice. But if they want to go use the mortgage advisor, you know, especially when they don't charge fees, which is really paramount, because when you don't charge fees, the service is free. Go in, we'll sit down. Any mortgage advisor there who is not charging fees will sit down and spend the time with you, go through everything from the start to the finish, show you exactly what each bank is charging, the hidden costs, the hidden fees, go through absolutely everything. And they're not affiliated to one particular lending institution.
And I think that's the point, really, to drive home here to the viewers. You know, be open to going to a broker, whoever your choice is, and go to that broker, ask them, do they charge fees? You know, what's the service include? But it means they're actually going to go out shopping for the best rates.
You see, and a lot of people, and you know, we all have fallen into it at times. It's you know, it's kind of the comfort banking, whereby you're with your bank. We get a car loan with them, we have our Visa card with them. But you know, you don't have to, just because your bank is your bank, you don't have to take your mortgage out with them. You can shop around and get the best value and the best mortgage for you that suits your needs and tailor-made.
Very good. Well, Tara, thank you as always. You have so much gold within you in terms of advice. Thank you very much.
It's my pleasure.
I would just like to say hello to Emma Vines. I hope I'm pronouncing Emma's name right. Emma said, Tara Kelly, what a fantastic woman. I have to say, I'd agree with you, Emma. And to everybody who tuned in, thank you very much. Waterford Property Watch. I wanted to also just say thank you very much to the Independent Property Price Index. All of the data that I refer to here is data that we rely on, and it's credible data supplied to us by John Kennedy, and thank you very much, John. It's data available to estate agents all over Ireland, and it helps us find out what's going on in the market. Lastly, apologies, we were about an hour late going on air. Technical issues because we went live, but as I always say, it's worth always trying to get over the speed bumps, as we all have in life, and just keep driving on to get the job done. And finally, as I always say, up the data.